Hello guys and welcome again to my channel. So we are at the computation of merchandise inventory and amounts. And in the last episode, we talked about specific identification, first in first out periodic, and first in first out perpetual. So I said we have to compare the first in first out with the last in first out and the last in first out perpetual. So there are also two, periodic and perpetual. So the LIFO is the reverse for the FIFO. So what will happen if we're going to subject our illustrative example to last in first out? Okay, just wait. Remember that in our FIFO we have both the FIFO periodic and FIFO perpetual. We have 45,240 as the ending inventory. Okay? Now again, let's start solving the illustrative problem using LIFO periodic and LIFO perpetual. So, LIFO, that means last in, first out. So that means the most recent purchase of the company will be the ones that will be sold first. That is just an assumption. Again, the last in, first out, the first in, first out, and the others are just assumptions. It does not really reflect the actual selling of the goods. Like for example, when we talk about first in, first out, it doesn't mean that when you actually sell, you have to sell first the inventories that was received first by the company. It's not like that. Okay? So these things, these methods are just, what do you call this? Inventory estimations. Okay? Estimated, but it is very near to what is the actual ending inventory. Okay? So I hope that's clear. Because maybe you might think that when we talk about first in, first out or last in, first out, the most recent purchase will be the ones sold first also as to the physical inventories. It's not. Okay? So what if we use last in, first out periodic? So what is the last? Of course, the last group that was, what do we call this? That was purchased by the company is this 3,000 units at 4.8. So it's as if those are the ones sold first. So that means the 9,700 units ending inventory is as if those are found on the older inventories. That's the meaning of last in, first out. Again, that is very much in reverse with the first in, first out because in the first in, first out, the first inventories will be the ones which will be sold first. In the last in, first out, the last inventories, the last groups of inventories who came to the company will be assumed to be sold first. So, on LIFO periodic, the 9,700 units might come from the oldest group of inventories, which is this 1,000 units, the oldest, because that's the beginning inventory actually that was purchased in the last period. So 1,000 units times 4.5. Okay? As to the other 8,700, they might come from here. So 10,000 units, no, not 10,000, because there are only 9,700 units left. Minus 1,000, that's 8,700 times 4.7. So that's last in, first out, periodic. So let's compute. The first one is 4,500. Ah, and then the other one, calculator. 8,700 times 4.7. It's 40,890. And that 4,500 plus 40,890 equals 45,390. So when you compare it with the FIFO periodic and FIFO perpetual, that is actually very near. Am I right? Yeah, it is very near. So that's how you compute the ending inventory using the LIFO periodic. Okay? Now let's go to LIFO perpetual. The same with the FIFO, it is not focused on the 9,700 units only. It will focus on analyzing all of the given. Like for example, we have on 1-1, we have the description. This is the date. This is the description. Number of units. Total. Okay, let's put here the total. And the running total. Running. Yeah, let's put running. So, let's put it right here. So, the description, it's purchase. Oh no, it's the beginning inventory. There are 1,000 units. Of course, the unit price is 4.5. So that's 4,500. And then we have the running total at 4,500. And then there are purchases on 1.7. Purchases. How many units? How many units is 10,000 units. And then the purchase price per unit is 4.70. 10,000 times 4.70 equals 47,000. And then the running balance will become 51,500. And then after that, we have purchase returns on 112. So purchase returns. How many units were returned? Again, that's 2,300. But then again, since there is no, do we call this? There is no unit price for the purchase returns. Let's go back to the logic. So these purchase returns that we are having are actually coming from the most recent purchase that we have, in which there are only two groups here. This beginning inventory has been purchased last period. This is our most recent purchase. So that means maybe this 2.3 is from this group at 4.70 per unit. So 4,000, 2,300, 2,300 times 4.70 equals 10,810. And the running balance will become minus 51,500 is 40,690. Okay? Next is we have on 120, on 117. On 117, there will be purchases again. 6,500. But this time, it has a unit cost of 4.60. So the total is 65 times 4.60 equals 29,900. You can check it. And again, let me check because no one is checking me. 65 It's very different if I have some companions. So we have 29,900. That's correct. And from 4690 running balance plus the 29,900, that's 70,590. But then, here's the twist. There is a sale that happened on 120. Sales. How many? 10,000 units. That's a deduction, of course. However, you cannot lump all the 10,000. Why? Because you have to think, this is last in, first out. So that means, when selling, the most recent purchase based on this will be the one sold first. And the most recent purchase so far is not this one. We're going to base the most recent purchase on the transactions that has already happened. So since this is 120, supposedly, you're going to analyze the purchases before the 120. You do not look at the 128. Okay? So that's the twist there. So supposedly, when we talk about last in, first out, supposedly, the last in is the purchases on January 28. So that should be the first one to be sold. However, the sales happened on 120. So it's impossible that you can put this in the equation. You can only analyze backwards on the 120. So meaning, on the sales of 10,000 units, maybe the 65 came from here times 4.60, which is, no need to calculate, that's 29,900. Okay? So, we are still lacking by 3.5. So, where did this 3.5 come from? Again, on the 10,000, the 2.3 has already been returned. So, this is 7.7. So, last in, first out, since this is the ones being the first sold. So, the next group will be this one. Right? So, that means the 3.5 came from this group, which is at 4.70. So, if that is the case, 3.5 times 4.70, we have 16,450. Maybe we could erase this already. Okay. So the running total will be 75,90 minus 29,900 minus 16,450. That's 24,240. So that's it for 120. Now here comes 124. There is a sales return. So your customers returned goods. The question is, how much will be the sales return? So we have the units at 1,500. The question is, what is the unit price that we're going to follow? Again, that is very logical. Maybe the most recent sales that you have made is the ones that were returned by your customer. And based on this, it's based on this group, the 3.5 times 4.17. So let's use that. 1.5 times 4.70, that is 7,050. So the running total, 7,050 plus 24,240 equals 31,290. And lastly, we have a transaction on 128. On 128, there is a purchase of 3,000 at 4.8. So that is 3,000 times 4.8 equals 14,400. 14,400 plus 31,290, we have 45,690. That's it. And of course, that is for 9,700 units still. Like, when you are going to summarize this supposedly, it should be 9,700 units. Of course, we will talk about first, sir, why is it in the FIFO periodic and the FIFO perpetual, we have the same answer, 45 to 40? How about here in the LIFO periodic, your answer on the periodic is 45,390, but on perpetual, we have 45,690. Why is it? Actually, normally, the LIFO perpetual and LIFO periodic is usually the same, except if, in one case, the last transaction for the month or for the period is a purchase. Because if that happens, then the LIFO periodic and LIFO perpetual will not be the same. Actually, the thinking, if you wanted to make them the same, you just have to revise the LIFO periodic, in which instead of saying that the oldest from the 9,700 units, it came from the oldest group, which is 1,000 units times 4.5, you should take into account this one. Because it is impossible that the sales is coming from this one. The sales account or the sales transaction happened before these purchases. So it is very much logical that on the 9,700 that was left, 9,700 that was left, the 3,000 is included. For example, if that is your thinking, 3,000 units at 4.8, then we will have 14,400. And then the remainder, 6,700, the 1,000 is coming from the oldest group, this one, at 4.5. So that is 4,500. And the remainder will be 5,700, if I'm not mistaken. That's 5,700. 5,700 comes from the group here on the 10,000 units, which is at 4.7. You'll see that they will be the same. 5,700 times 4.7 equals 26,790. Let's try. 26,790. Let's add back the 4,500. And let's add back also the 14,400. That's 45,690. The same. However, the official computation for LIFO periodic is something like that. So, why are they different again? In the LIFO periodic, it's very straightforward. There are 9,700 units that was left. Since last in is also the first out, so that means it came from the oldest groups of inventories, which is this 1,000 units, which are purchased in the last period, and 8,700 units, which is the second oldest group that was purchased. That's the official computation for LIFO periodic. Okay? How about LIFO perpetual? LIFO perpetual is more logical. So that means if there is a last transaction which is a purchase on the 9,700 units that were remaining, of course, the most recent purchase, especially there is no sales that is coming after these purchases, the last purchased group should be included on the 9,700 units, which is like this. And then, for the remainder, you go for the oldest groups of purchases. And then you'll have this, 45,690. So is there any reason that I exposed this and that? Yes, Because normally when I am answering some questions in the quizzes, in the exams, and the licensure examination, I do not do this because this is tedious. I do this. If ever it will be asked, what is the ending inventory using LIFO Perpetual? I do this. Okay? So, it's logical. On the 9,700 which were not sold, supposedly, the latest purchase is included in that 9,700. Okay? And then you use LIFO already on the remainder. Okay? Now, let me tell you this. This last in, first out periodic and perpetual is not already used or not part of the choices already for IAS 2. If you are following IFRS and IAS in as accounting standards, the LIFO periodic and LIFO perpetual are not really considered in those standards in the preparation of financial statements. Maybe because, for example, if we talk about inflation, which is normal, inflation, that means the cost of the products are increasing as time passes. Just like this 4.5, and after that it became 4.7. This is seldom. The 4.7, it will become 4.6 as time passes by. So the normal is the inflation. So that means FIFO makes sense. Why? Because the ending inventory will be valued at the latest price, which is the inflated. Okay? How about LIFO? If there is inflation, the LIFO, the ending inventory, is to be measured at the price of the oldest group, which is cheaper. Right? So, if that is the case, there are cases that last in, first out will give you a bigger net profit, which is not ideal. Because if ever you use the last in, first out, the ending inventory will have a lower amount. Am I right? Yeah. Am I right? Yeah. Okay, erase. Just remember this. Just remember, the LIFO, last in, first out, and both periodic and perpetual are actually not included in the options already in measuring the ending inventory when you are following the international accounting standards and the international financial reporting standards. Okay? And remember also that FIFO periodic and FIFO perpetual, when compared to LIFO periodic and LIFO perpetual, when there is inflationary conditions, then the FIFO periodic or FIFO perpetual will bring about ending inventory which is higher, because the ending inventory in FIFO is based on the most recent prices. And in inflationary economies, for example, the prices are bigger recently than the earlier earlier dates. Okay? However, if we're talking about deflation, the ending inventory for LIFO will become bigger. Okay? Now, sometimes that's why I discussed to you the LIFO periodic and perpetual. It's because sometimes you have to revise your ending inventories from LIFO to first in, first out. There are some questions like that. So you need to have, what do you call this? The knowledge about the logic of last in, first out, so that you can successfully transform it to first in, first out. Okay? Next, sometimes, since these methods are focusing on computing for ending inventory amounts, sometimes you may forget that the cost of sales can also be asked in the question. So, basically, I'm telling you, it's not only based on the ending inventory, the questions for merchandise inventory and amounts. Sometimes you'll be asked also what is the cost of sales. Okay? So, as long as you understand the logic, it's okay. Okay? So, let me check the time. Yep. I do have some things to consider. Let's finish this. Okay, supposedly it should be on the next episodes, but let's finish this. Let's go to weighted average and moving average. Again, On the LIFO Periodic, our answer is 45,390. And for LIFO Perpetual, it's not the same. It's only 45,000. It's actually 45,690, which is bigger than the LIFO Periodic. Okay? So what happens if we talk about weighted average? For me, weighted average is the most simple because it's very logical. I mean, last in, first out, as well as first in, first out are also logical. But I like this weighted average because what you need to do is just compute for the net purchases. Like you're just computing for the cost of sales. So on the cost of sales, your formula will be beginning inventory, am I right? And then the net purchases, and then minus ending inventory. The beginning and the net purchases equals total goods available for sale, alright? And then on the ending inventory, you have to deduct it in order to get the cost of sales. The pattern is very similar. So what you will do in the weighted average is just do those things that I said. So we have 1,000 units for the beginning inventory times 4.5 equals 4,500. That's what you need to do. And then, the twist in the purchases is that this is not gross purchases, something like that. There will be a lot of line items. Like for example, when we talk about purchases, gross purchases, we have purchases number 1 at 1.7. That is 10,000 units, right? At times 4.7, something like that. And then, it is followed up by purchase returns. In our last discussion, the purchases is only one line item. Not in this case. But the substance is still the same. So the purchase returns is 2,300 times, of course, since there is no amount, the unit per, oh no, the unit price or the unit cost is not present. Again, it's very much logical to say that between the two groups, where did you think this comes from? Those goods that you return to the supplier, of course, on the most recent purchase. So you will copy the 4.7, and then after that, there is purchases again. This purchases group number 2 happened on 1/17. So we have 6,500, and then the cost of that is 4.16. Of course, you have to remember that purchase returns is negative. And then, you skip the sales because we're talking about computation of cost of sales right here. So beginning inventory plus net purchases only, including the freight in and purchase returns and purchase discounts. We do not include the sales, of course. Okay? So, when we skip the sales and when we skip the sales returns, we go for the third group of purchases, which is 3,000 units. 3,000 units times 4.8. So, let's solve. 10,000 times 4.7 is 47,000. 2,3 times 4.7 equals 10,810. 10,810. Okay? And then 6.5 times 4.60 equals 29,900. And then lastly, 3,000 times 4.18 equals 14,400. So, it really is a computation only of the cost of sales, whereby beginning inventory plus purchases equals total goods available for sale. But in our past discussion, again, the gross purchases is only one line item, and the purchase returns and allowances is only one line item. That is the ones different, because purchases here has three groups already. Okay? But the substance is still the same. Now, aside from that, aside from the difference of one line item, in here, it's as if it's expanded the computation. It includes units and it includes unit price and then the total. In the past, there's only the total. Okay? Now, let's get the total goods available for sale. Let's start with the units. The unit so far is 1,000 plus 10,000. So 11,000, the total goods available for sale. However, we returned the 2, 3, and we bought another group, 60,500 units plus 3,000. So all in all, the total goods, the maximum goods that we are able to sell is 18,200 units. And you can also get the total goods available for sale when you sum this all up. Like for example, 4,500 plus 47,000 minus 10,810 plus 29,900 plus 14,400. That's 84,990. Let's check again. For the second time, we have 4,500 plus 47,000. Oh no. 47,000 minus 10,810 plus 29,900 plus 14,400. Okay, it's confirmed. It's 84,990. So as you can see, we have the total amount and then the number of units. On the weighted average, you should get only the average. And how do you do that? It's 84,990 divided by 18,200. Wait. It's 84,990 divided by 18,200. That's 4.66978. Let's put on the material decimals. It is followed by 0, so let's ignore. So that's 4.66978. And the good thing for this is that if you have computed already the units, the ending inventory units, you should only copy that 4.66978. So, times 9,700, you will come up with 45,296.87, which is very much also near. It's very near to the FIFO, to the LIFO Periodic and LIFO Perpetual. We have 45,296.87. Okay? So that's weighted average. It's as if this is just patterned with the computation of cost of sales. And actually, you can get the cost of sales immediately. Because after you get the ending inventory, you just have to deduct 84,990 minus 45,296.87. We have 39,693.13. Okay? So that's weighted average. So that is what we call also average periodic. So you just get on the beginning inventory, the units times the unit cost, and then the purchases and the purchases returns if ever. So the units and the unit cost, and then you add the beginning inventory with those purchases. You'll get the total goods available for sale. And when you get there, you just have to add all the units, you just have to add all the amounts, and then this will become the numerator, the total goods available for sale, divided by the total number of units purchased, acquired, including the beginning inventory. And you will get the average unit per ending inventory left. Okay? So that's it for weighted average, and I hope you still understand. So the last is the moving average. So on the moving average, it's not like this. It's the same with perpetual, FIFO, and LIFO perpetual. You have to consider all of them, not just the purchases and the beginning inventory. Because if you remembered on the weighted average, we did not consider the sales, the 10,000. However, if we're talking about moving average, we have to consider everything. Okay? Again, that's the same with FIFO perpetual and LIFO perpetual. Okay? So, what will happen? I guess we can use this space. I don't know if you can see. I think to play safe, let's just delete this. After all, the answer is already here. On the moving average, this will happen. First off, we have the date, and then units, and then unit price, and then total. That's it. So for example, on January 1, let's put on that's beginning inventory, right? Let's put on 1,000 units, and then that's 4.5, so that's 4,500. There is no problem at all. However, on 1/7, you have purchases, which is 10,000 units, and then that's at 4.7, so that's 47,000. And next is purchase returns. So you do not have to average anything yet, because purchase returns is very much related also to purchases. So you can go on. There's no averaging yet. Okay? So you have 2,300. However, this is a deduction. And then again, logic will tell you that this 2,300 that you have returned is coming from your latest purchase, which means it is coming from this group. So 2,300 times 4.7, we have 10,810 deduction. And then, you can still go on without averaging as long as purchase returns, and then another purchase again, just like this one. You can still go on without averaging. So again, this is another group of purchase. We have 6,500 times 4.60. So 6,500 times 4.60 equals 29,900. Do we go on? Yes. However, since from purchases, the next transaction is already sales, we cannot go any further already. We have to get the average first. And how do we do that? We get the units and we get the total before we go to the sales on 120. So at this point, we have 29,900 minus 10,810 plus 47,000 plus 45. So I added in reverse. So this is 70,590, the total. And then as of the units, We started with 1,000. We bought the first group, the second group, 10,000 units. We returned to 3, and then we bought another group, 6,500 units. So that is 15,200 units. And what do? We get the average. We make this the numerator, and we make this the denominator. So 70,590 divided by 15,200, that's 4.64407,895. 07895. Okay. So if you don't want to round off so much, you put everything. Okay? And after that, we can proceed to sales. Our sales is 10,000 units. And this is the ones that we're going to use. 4.64407,895. So, times 10,000. Actually, I'll round off already this one into decimal places. 46,440.79. That's a deduction. Okay? So, that's for the sales. So, you don't need to total it again, just like this one. As long as the transactions are just beginning inventory and then the purchases and purchase returns and purchases, you can go on without totaling and without getting the average unit cost. The same with the sales. We will not total first because on 124, we're talking about sales returns. So as if they are grouped together and these things are grouped together also. Okay, so since there is a sales returns of 1,500, that's an addition to our merchandise inventory when the customer returns. So, of course, since there is only one sale transaction, you just have to copy this. 4.64407,895. And that would be 4.64407,895 times 1,500. You're gonna get 6966.12. It's up to you if you wanted to total every step of the way. However, it will take a long time. Okay? For me, I just total and I get the average if ever. From purchase, it will become sales already. And from sales, it will become purchase already again. But sometimes, just like this one, I will not total because the last is actually a purchase. So I can go on. You have 3,000 and there is 4.8. Actually, I don't need to total this because there is a unit cost. How about sales? A while ago, I totaled this in order to get this because the sales has no cost or unit cost. We have 10 pesos, the selling price, but the unit cost is the ones needed here, which is why we are forced to total this and then total the units and get the average because we don't know what will be the amount here. Sir, you said from sales, it's purchases already. You should total first before going to purchases. Again, let me tell you again. I will not. Why? Because this last transaction has its own unit cost and no need to average something. So 3,000 times 4.8, that's 14,400. But then again, let me tell you, you can. Like for example, this one, 5 plus 47,000, 1,000 plus 10,000, and you total it. So we have 11,000, and then This is 51,000 plus, and then you get the average. It's up to you. But it will not be used because the next is the purchase returns pa. Di follow? So, better be smart in solving. Okay? So, this is it. So, from the total 15,200, we sold 10,000. So, minus 10,000 plus 1,500 because of sales returns plus 3,000. You'll have 9,700 units. Which is actually the same with what is stated in the problem. And then, as to the amount, from 70,590 minus 46,440.79 plus 6,966.12 plus 14,400, you will have 45,515.33. 45,515.33. And you know what? Computation for moving average, if that is the requirement of the problem, there is no shortcuts. Unlike the FIFO Periodic and FIFO Perpetual, I will not compute for the FIFO Perpetual the way that it should be computed in tests. I will compute the FIFO Periodic. After all, they always arrive at the same answer. And as to LIFO Periodic and LIFO Perpetual, if the question is all about LIFO Perpetual, I will still not solve in detail. Okay? I will just revise the LIFO Periodic to include the last purchase in the analysis, and I'll get the LIFO Perpetual. In here, the weighted average is not the same with the moving average. This too has no shortcuts. On the moving average, you have to do this every transaction. Okay? So that's it. In computation for merchandise, inventory, and amounts, we have specific identification, FIFO periodic, FIFO perpetual, LIFO periodic, LIFO perpetual, weighted average, and moving average. And if you wanted to practice, these are your answer keys. You have to solve it on your own without looking at my solution so that you will know if ever you have understood or not. So that's it for this episode. If you understood, please click like, subscribe, and hit the notification bell. And share this to those who needs it. Okay? Thank you again and see you on my next one.